there's a bearish truck moving and there's a huge bullish train is approaching. Once these two collide, that's when you begin to see another massive appreciation in Bitcoin. Then once that happens, all these Bitcoin treasury companies, they need volatility, and we haven't had that. I just see the rate of price appreciation versus the rate of capital flow is going to be the most important thing to measure. The government used to be the opposing side to Bitcoin. Right now we have changed that. We've got an R big push this cycle. It's probably not realistic to expect another huge step at this point. We're getting a huge amount of additional fiscal deficit, which is bad for the economy but good for asset prices, right? So a lot of expansion in the money supply because of the tax cuts and the bill that just got passed. Lots of bad things are in history, and now we're looking forward to significant expansion of the money supply and liquidity, which will be really, really good for Bitcoin.
Give us some overview of like who you are and why you're excited about Bitcoin.
Great reminder. I also always forget to introduce myself. So I am a business professor. I mainly study business and economics through the lens of data. And in Bitcoin, I'm a co-founder at 21st Capital, and we provide two important services to the Bitcoiner community. One of them is self-custody. We provide solutions that create the safest type of multi-sig, which is multi-layered multi-sig with inheritance built in and several layers of checks and balances. So we help people onboard to this technology to minimize the risk of loss. The second thing we do, which is much more recent, we started this year, is Bitcoin Intelligence platform, which is a platform where you can access Bitcoin valuation models. And also our flagship product is Bitcoin Intelligence Report, a weekly analysis of the market from economics, liquidity, and on-chain perspectives. So we've launched this very recently, should not be more than 3 months, and having a great time there, navigating the markets and bringing clarity to our readers.
I love that. And because I think there's a big demand for understanding what's going on in Bitcoin. If you're just hodling and you're just like doing it, but I have so many people reach out to me, especially people that are either newer to Bitcoin or people that are not yet into Bitcoin. They're like, oh, like, why did it go down? Like, what happens in in the Bitcoin market? How does this affect the next couple of months or even years? So really cool. And what is kind of like, if you had to summarize what's currently happening, how would you like kind of describe the market right now, and maybe even give a comparison to where we at like a year ago, or like 3/4 of a year ago, something like that, 8 months ago when we recorded last time?
Yeah. So let's see. I mean, this cycle has been very interesting and slightly different from last cycles. Instead of having a massive explosion of 10x, 20x, 50x price rise, we've been having this stop and go system where we get a huge macro event. For example, the approval of ETFs, bringing a lot of excitement and a lot of real money, not just psychological effects, real money flowing in and causing the price to go really, really high. So first time we were slowly coming out of the bear market, and I actually chronicled this. The first steps that took us out of the 20K to 30K to 40K to 50K, all of these were matching positive news about the ETFs. So we initially heard that BlackRock is showing interest. That was a huge change, right? So we were in a world prior to this, we were in a world where SEC was fighting us. We weren't even sure what is legal, what's not. And even before that, questions were like, is this thing is going to be banned? Is this too good to be allowed? So then we we got more and more regulatory clarity. As I said, BlackRock and others showed interest. And you can imagine when they actually make those decisions, it's something that has been going on for probably years. And a lot of people are get positioned before BlackRock gets in, or maybe even their own network or their own corporation would begin buying before you actually see things approved, right? So they build a position early on. So that explained why, as we were getting good news, Bitcoin was also rising and rising. And of course, after it got approved, a lot of people were like, this is going to be a sell the news event. I was in the camp that says this is going to be fantastic, and it's going to actually keep the price going faster. There would be some sell the news. I think in the first day we got sell the news or a little bit, and then of course after that, massive flows into all these ETFs and Bitcoin went up. But then what happened was that it kind of ran ahead of itself. So if you look at a Bitcoin model, we can show them later as well. You would see that we actually overdid it. So let's see if I actually have something. Yeah, the chart I have right now goes. Yeah. Actually, I do have it. So I don't know. Would you like us to?
Absolutely. You can bring it up. If you can share, you can just put it up.
Okay, so that would be a lot easier if I can show it as I explain. So yeah, basically. If you look at, this is a basic power law model, right? And where my mouse is around where ETFs are being discussed, right? So you see, we from way undervalued position, we rapidly caught up with the trend. And compared to last cycles, this was a little bit fast. And you see that the rate of change is so fast, and this couldn't really continue. And again, you would expect the market wanting to take a breather, and after that we got a lot of it. Actually, we got 7 months of nothing, right? So towards the end of 2024, we were just slowly bleeding down, and I think we went as low as 55 or something. Yeah, so 58 or something, that range. And that was when the market was extremely exhausted after 7 months of bleed. People were losing hope. And this is the place where we were looking at funding rate and a lot of the metrics on chain. They were very, very oversold. Especially, I have a tweet that I think I posted here like a couple of weeks before the actual bottom. And I said funding rate is extremely low. This is a great reversal point. It didn't happen then, but then a couple weeks later it did. So we went back, kind of recovered all those losses, but then we got another huge thing, which was Trump. So once Trump got elected, and it was very clear, you see, this is actually around November, right? Once he got elected, and it was very clear that he's going to be supportive of crypto and all the other crazy news that came with it, you see we got a parabolic move up, and so we get a huge leg up, and then a slow phase, and then a steady phase. This is a clear sign that the market needs time to absorb all this good news. So we were absorbing it up and down, and then tariffs come along. This is where we actually launched Bitcoin Intelligence, and we were all the time explaining to people that tariffs are going to be negative for the market. So if you again remember, this sounds like ancient history, but if you remember, there was a lot of commentary they were saying tariffs actually going to be fantastic, and they're going to 2x the markets, and everything is going to be great. I was again in the camp that said this would be negative for everything, including the economy and Bitcoin and asset prices, right? However, we had a complete playbook, which was pinned on my Twitter account for months. And the playbook basically was that it will not be bad. It will not be good. It would be a combination. Why? Because we expected Trump doesn't want to crash the economy, right? He wants to move tariffs, but he's extremely incentivized against allowing a crash to happen. So once I ran all the game theory and also based on the economic logic of how tariffs work, we were totally expecting tariffs to begin hurting the economy. We had a blowout in the bond market, and we had a slowdown in everything, and we had asset prices selling. Money was clearly moving out of the United States. The stocks were selling, bonds were selling, dollar was down, money was leaving. So once things got bad enough, Trump clearly showed leniency and added all those pauses, which actually just ended. And he then came out with another persona. This is actually in one of our articles. Trump has two personas. One is protectionist, one is a capitalist. Capitalist is the bigger one. Protectionist is sort of a tactic. So as soon as the market got really bad, he came out with the protectionist, with the capitalist persona, and clarified that we're not going to be letting the market to tank, and gave all sorts of exceptions and this and that and deal announcement. It's still going on, a little bit of improvement here and there on the deals, but the important thing is the market got the confidence that they needed. And we began a V-shaped recovery, which is exactly what we predicted. We said there would be a V-shaped recovery, but the thing we didn't get was how fast and how much this will go. I was expecting some recovery and then a slow progress until we get the rate cuts, but we actually did another full all-time high. Once that happened, again, we put out another report. The title was, I Need to Take a Break. It came out around here. And we basically said that this is too much. I mean, in our playbook, we needed rate cuts to happen. We needed tax cuts bill to pass before we get fully bullish, but price overcorrected to the upside for whatever reason. So we took the risk to be very clear that we need a break. And we actually did, instead of a break, actually we got some mini crash, and then it got bought up very well. And this is where we are. And now, I think 2 weeks ago, we published another report saying that, I think it was last week, the tax bill is moving well. And then rate cuts are coming, slow, but coming. And we do have positive liquidity regime. The only thing we don't have right now is on-chain demand. So when you analyze the data, you see that long-term holders are selling, but we don't see a lot of excitement still. We actually see decreased volume. We see lower implied volatility in the options. We see lower risk taking in the futures market. So people are still a little bit risk averse. But the good thing about the way we look at the market is we don't just look at on-chain. We also mix it with macro, which frankly, a lot of times macro determines what happens later on-chain. So our macro analysis, to wrap up this long discussion, our macro analysis, and I'll stop this, but I have other charts that we can discuss later. Our macro view is because of tariffs, we've had a pretty significant deleveraging. Lots of people have been liquidated. If you remember, Japan carry trade blew up. Bond trade got in trouble. Many people, go back like 4 or 5 months ago, people were expecting bond rates to go down. Many people got positioned for it. Unfortunately, bond rates actually went up. And when you also look at Bitcoin, all the bubble has been deflated. There is no sign of over leveraging. No sign of leverage is very low. Again, option activity low, trading activity low. So we cleaned everything. The market got cleaned up. Leverage was wiped out, and now we are ready for another push. But we still don't see that on chain. But we do see that in the economic data. So what's happening in the economy? Moving. I think just to summarize it, and we can look at each piece separately, but we're getting a huge amount of additional fiscal deficit, which is bad for the economy, but good for asset prices, right? So a lot of expansion in the money supply because of the tax cuts and the bill that just got passed. big beautiful bill. Then we have the Fed that has been resisting the data. They have a lot of rate cuts that they have resisted. So there's a lot more coming. This year they themselves are projecting 2, but it all depends if the economy is actually hurt because of tariffs. Will get more. But the important point is rate cuts are resuming as soon as the next Fed meeting, and most likely in September. And once that happens, you're getting fiscal stimulus, you're getting monetary stimulus, and slowly you see that on-chain depression that we see will come back. People begin to feel much more confident to take a position. And but from here to there would be a little bit of volatility as well. We have TGA refill that we have to deal with, but pretty much towards the end of the summer is when all the negative effects of tariffs have been priced in and or dealt with through the deals, and then the rest of Trump policies, which are very bullish, they will begin to take effect. So this is a great place to be in. Bitcoin is still near all-time highs, and we have passed one of the worst events of the perhaps this 4-year administration cycle. It's all over. We've had a war between Israel and Iran, which got really scary for the energy market. That also is gone. So lots of bad things are in history, and now we're looking forward to significant expansion of the money supply and liquidity, which will be really, really good for Bitcoin.
That's super interesting. There's a lot in there, but the main thing I'm questioning is kind of what are you looking at when you look at market sentiments, and the buying behavior is also something that I'm really interested in, because it's like 5-10 years ago, the average guy that bought Bitcoin is different than now. We talked about before we recorded about Bitcoin Treasury companies. There are just like a lot of different players now in the game than like 5 years ago, 10 years ago in Bitcoin. And with different players, the buying behaviors and maybe the cycles and all those things are kind of also changing with that. How do you look at like what are you really looking at when you look at the market, and how do you look at like just different players? I think you mentioned it in our first episode that the ETF was kind of a turning point for Bitcoin and who is in Bitcoin. Now the ETF is out for like 1.5 years in the US. How do you look at that?
Yeah, so the one thing I'll mention is Bitcoin is growing and becoming more mature. And one of the perhaps less positive effects of this is it will be slightly less volatile. So the reason for that is, for every buyer, there would be a lot of other sellers around the world. The market will be much more liquid. And even though people think Bitcoin is an illiquid asset, it could be very liquid as well. It's something you can sell over the weekend. It's something you could take it in self-custody, but within a few minutes you could bring it back on the market. So on top of that, you have all sorts of institutions that have ready to spend money. So it's not all self-custody black holes, which we like Bitcoin to be in. But the reality is there's massive amounts of coins on exchanges and all sorts of other TradFi vehicles that make the market much more liquid. And this is actually a great thing from a fundamental perspective, but it will also have the effect of making those spikes and God candles that we like to see less likely. The positive side of that is dips will also be bought very well. So Bitcoin really didn't have any business being around 80K when NASDAQ was in free fall after the tariff scare. If this was before, a single tweet from Elon Musk cost us $20,000, I think, in last cycle. But Bitcoin has been extremely resilient. The recent crash was from 111 all-time high back to 100. So only 10K quickly bought up. Now we're back at 108. This is all the effect of the maturity of the market, right? So it's a really positive outcome, but it will also cause less volatility. And another thing to realize is now it will take a lot more money to move this market, right? We have moved up from, again, 80K to 108 now in a very short amount of time. Like it's been 2-3 months, right? So imagine how much money it takes to keep the market up like that. And whenever that happens, you need to give it some time for the market to absorb all that price appreciation. So a lot more coins have to change at that price, so the price gets stabilized. And that's why you typically get a massive spike, because a huge amount of demand comes in a short period of time. It spikes the price. There might not be enough coins on exchanges. But once that happens, more coins come to exchanges and then begin to be sold. So a lot of people are like, okay, I'm ready to spend at this point. We have to let all those sellers to essentially do what they need to and then end. We need the seller pressure to get exhausted. So because of that, even though you hear a lot of those positive news, billion-dollar, million-dollar buys, you sometimes don't see the corresponding effect on the price. Another thing we do see in on-chain is long-term holders are selling, and they have been selling consistently. Like people who have held for 4 or 5 years or more, they are now selling. People who have held from 16K down the bottom of the last bear market, they are now selling. And they've been doing that for many months. Because of that, all those massive spikes that could have happened got a little bit more subdued. We can speculate why this is happening, but that's a novel thing in this cycle where you see more selling from long-term holders. Probably it's the psychological effect of 100K. 100K is very significant. A lot of people are like, I've held this thing for 7 years, 5 years, 6 years. Now it's at 100K. That's kind of a psychological point for me to live and enjoy my life a little bit. So these long-term holders now have enough reason to begin, cutting positions a little bit. And that's the best explanation I have thought of. But they are selling, and for that reason, even though all these big corporations are buying, they still can't cause 10K, 20K price increases. And also note that we are actually doing very well. Go back to the ETF time. ETFs cause the market to kind of run ahead of itself, because according to the cycle pattern, we shouldn't have had an all-time high before the end of the cycle. So this cycle, we had an all-time high of 74.5, if I remember correctly, too early. Because of that, we had to pay the price, which was wait for a long time until all that appreciation is absorbed. And I think we are just right now, we had a wrench thrown at the market because of all these tariffs. And I'm very excited at this point because this thing is slowly being behind us. Trump is now back. He's making some more news and headlines with tariffs and all that. But we've analyzed many different ways this could impact the economy, and those effects are much weaker now, and all the positive effects are arriving. So the way I see this is there's a bearish truck moving, and there's a huge bullish train is approaching. Once these two collide, that's when you begin to see another massive appreciation in Bitcoin. Then once that happens, all these Bitcoin treasury companies, they need volatility, and we haven't had that. If you look at MicroStrategy or Strategy and many other option contracts that have been the fuel of price appreciation for these equities, they have been extremely subdued. I think implied volatility is at extreme lows. We probably haven't seen this bad in several years. Maybe you have to go back to the bear market to see this much subdued activity and subdued volatility in the options market. When that happens, like companies like Strategy, they need options. They need volatility. Actually, they extract value from volatility and turn that value into more Bitcoin, right? But when there's no volatility, they can't do that. But the thing is, once that liquidity train arrives, once we begin to see the effect of the money supply expansion, which, as I said, is probably right around the corner, maybe 1 or 2 months until it begin to show the effect in the asset prices. Once that happens, volatility picks up. Once that happens, all these Bitcoin treasury companies will double down and will be accumulating much more. So then a huge self-reinforcing cycle will begin. And that's what ultimately could take us from where we are to maybe closer to 200 and more. And then we will eventually, if that happens, I'm certain that if we do go that high, we'll have another mini crash or medium-sized crash. Some people are like, the moment we go to massively high numbers, some people are like, okay, that's it, we're never going back down. But unfortunately, all we see in the markets is you need to take breaks. So the way I see things play out is liquidity train arrives, then that will supercharge everybody, bring more excitement in the futures market, in the options market, in the treasury, Bitcoin treasury market. And they will all reinforce price appreciation. And this will be crazy. This will be crazy. Like your mind will not be able to absorb all the news that happen on a daily basis. And there would be a lot of noise and a lot of confusion and a lot of excitement in the market. And the thing you have to be careful is try to stay rational as well. The higher we go in price, the more bullish people will get, and that's exactly what will get them in trouble.
I posted, I think a few days ago, I think like Saturday or something like that, a post about cautious warnings about getting into leverage, because like, first of all, I'm just like, I just stay out of leverage. I'm just in Bitcoin 100% and don't do leverage, don't do any debt or anything like that. But I recognize that leverage can be a very successful strategy. I mean, strategy is kind of showing us how. But I do think there are a lot of people out there that they think they're doing the Michael Saylor strategy, but they actually just getting themselves into the risk of getting heavily burned, no matter if it's a liquidation or just not meeting the monthly repayments with being too greedy and all those things. And I do see a situation where leverage and like options trading and all those things that are kind of happening now in Bitcoin on top with those fiat games, that those could be leading to then the next bear market, because a lot of people are kind of like overdoing it once the price is rising. And I also feel like the next 6 months, 10 months could be really good. And let's see what comes after that. How do you look at the leverage situation and what potentially could bring down the price again?
Yeah, I mean, we just got a great example of it. Go look at a chart of strategy. I think it went up as high as 550, and then it's been down since then. Now, I was tracking it because I started thinking about strategy last year. I was watching the significant appreciation. And the thing is, this happens all the time. And let me explain. You get something that explodes in price. And we went from like super low prices to 500. That's super exciting. But the thing is, people who have been able to predict that, they are in the minority. And then once that happens, the majority arrives. And that minority look like, heroes. Some of them begin coaching others in how to get invested at 550, and they will excite people a lot. This is something our brain at some point loses its ability to think rationally when you see something grew by 500x. Or like significant numbers. This is why actually a lot of scams exist, because there are some tricks that actually work, right? So your brain actually gets greedy. When you see a price of something went from 20 to 500, you're like, I need to be in. And that's when the business of coaching and directing market's attention is flourishing. When that happens, they'll do much more of that. That will bring much more new investors at very high prices, and that's exactly when everybody is already positioned, and there is no new marginal demand coming in. and the market just can't go up higher. So you will win with leverage, but only if you're early. So this is a game of musical chairs, right? If you use leverage and you're early, you will win. But most people will be the second kind, which is they use leverage when they're late and they want to kind of make up for what they've lost, or what they've missed. For that reason, they over lever and then they actually experience the drawdown. I was witnessing a lot of the people who had made money in the first run up of MicroStrategy starting, showing bullish options trading strategies out there right at 500, 550. I had some clash with them too, because I was at the other way. I was selling options, and then 7 months later, both the price went down, and maybe 6 months probably. Both the price of the asset went down, but also volatility. So I can imagine some of the options that these people might have bought at that point is now down 90%, 80%. Not a great outcome, right? So a lot of the positive benefits you might have had in the run-up could have been wiped out. But you have to be, when you use leverage, you have to exactly know what you're doing. You have to be early. You have to be way ahead of your game, right? So people who can do that, they can succeed. But again, unfortunately, most people arrive late. If this is what you're doing is, if what you're doing is you look at somebody's podcast and then you decide you need to be positioned, you're already late. You need to have done your own analysis ahead of the time before everybody's talking about it. And free information you find about the specific stock is already old news, right? So, but if you can listen to those things for a long time, analyze it for yourself, and reach a conviction that's not popular belief, then that's when you can, take more risks and so on. But again, that's not most people. So this is how you get wrecked. Leverage works for like 5% of the people who then look like heroes, who then make the 95% copy them, and they will all lose. So that's the game we've seen like a million times so far.
I love that perspective. I've never heard that one, and I will probably use it. I also heard, I think George brought it up in a recent podcast I did with him. He kind of brought that example that Bitcoin went from a small boat, or I like the comparison of a jet ski, to coming to an aircraft carrier. So it's no longer as volatile, like it's harder to move left and right. But once it moves, it has some momentum, and it's harder to steer away from that. Is that also kind of what you're expecting the next couple of months, where we are going in this good bullish and like noisy environment, and it's harder to get Bitcoin out of that because it's just like a way bigger asset? Or because it's so big, just the blow of tops and the direction is just not as long? Like it's hard for me to think about that.
Yeah, I mean, I see it as a dynamic second order move system. So it's all about how fast the price is growing versus how fast capital is moving in, right? So if I see that, if my analysis is price is growing as fast as you expect capital to flow in, then 108K is completely neutral valuation to me. But if 2 months later we are at 180, this sounds like way faster than capital is flowing in. So then you expect the price to not be, what can I say, not be sustainable. Because again, imagine there is a market with 1 million people, and just 2 people in that market, you and I, decide that we can trade our Bitcoin for $1 million. But the other millions of people, they may not have agreed to that price, right? So when we do the trade and price goes up to that 1 million, new people come in and they have different views over the price, right? So we have to allow that kind of a consensus price to appear in the market. So there are pockets of illiquidity that cause massive spikes, but you have to allow that to kind of diffuse and the market does to settle, so that you actually can see where is the kind of equilibrium price, right? So I just see the rate of price appreciation versus the rate of capital flow is going to be the most important thing to measure in order to see if we are overbought or oversold, if you're very risky or low risk. And some of the ways you could look at it is look at realized price or realized market cap, which shows the real dollars, actual dollars, versus the nominal market cap, which is simply the price effect. When those things deviate too much, you have a price that's far larger than the capital inflow would suggest, and you have to come back, right? You don't exactly know when, but at some point you'll come back. Another thing you can do is you can use a model like I just showed. Let me go back if that's okay.
I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups, because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. And we have right now a summer sale going on for 15% off. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today for $186, and you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. I know how big of a hurdle it can be to have self-custody, but it's so freaking important to make that first step. We have to make sure it's as easy and simple as possible. And that's exactly what BitBox did. BitBox created the simplest and the easiest hardware wallet to use to get into self-custody. So get yourself a BitBox down from the link in the description. And when you use code Robin, you even get a 5% discount. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. The first time I ever made any money, I got myself from that money a watch. And ever since then, I collect timepieces to remember times where I achieved some milestone. That's why I got the Bitcoin 2025 edition when I went to my first ever American Bitcoin conference. So for me, the Bitcoin watches from Coin Vigilante represents the time that we are living in. For every person that wears a Bitcoin watch, I know they are representing sound money to the outside world. Make sure to check out those amazing Coin Vigilante timepieces down in the descriptions. I love those watches so much.
A model like a power law model, or another one that I have here, a Bitcoin quantile model that Plan C and I have been working on. Oh, you don't see that? I'm only sharing one screen. All right. So this is a power law. This is a quantile model. This is a more advanced than the power law model, just because it can also discuss the range as opposed to just the average, right? So if you look at a model like this, this does a very simple thing. This tracks the trend, right? And it does a good job in capturing the trend of Bitcoin price, the long-term trend, which you can imagine being a proxy for capital flow and price appreciation over a very long time. If you ignore all the noise coming from the bubbles and the crashes, Bitcoin has been growing on a logarithmic chart in a pattern like this. You can ignore all the ups and downs and focus on that middle, like yellow region, for example. And this has been methodically growing all the time. This is a pattern. This is a trend by which the network is growing. Every day, more people are learning about it. More people are getting positioned. So this general channel is capturing that. Within that channel, you get all kinds of crazy moves that get all the attention, but they actually matter less. Like a lot of people are worried about these tops here. What would be the exact top? I'm actually more interested in the bottoms. Like if the bottoms are consistently growing, that's where the real adoption is happening. On top of that, all the leverage games that people are playing causes volatility, which if you don't have a crystal ball, you won't be able to benefit like Scylla exactly at this top. So they really don't matter, are not relevant to you. Like if a price of $67,000 that lasted for 5 seconds is probably not too relevant, but everyone talks about it. Everyone thinks about it. So going back to what a model like this can do, this can give you an expectation of how fast the price can grow if it follows the historical trend, right? So this is actually what we're doing here. According to the range of valuation, and if you build a channel here, you would see that Bitcoin is sort of in the center right now. We are quantifying where it is. It's at 60% of growth from the bottom to the top, and 60% of the way done, right? So that would put us exactly as where we were in, I think this is probably, if I remember correctly, this is $20,000 in the last cycle, before we get the Elon adoption and then all the other things, Tesla adoption and all the other things. So we are at that kind of valuation, and you can see like every time we got to that valuation, we got a little bit of a bounce, a little bit of a pushback in this cycle. Last time we had just a little bit of a stop there, but in many of the prior cycles, the yellow region has been an important region that you have to pass before you actually accelerate to the top of the cycle. So going back to your question, if Bitcoin quickly goes up on this chart, it will show as having entered the orange and the red region. So we will see that it's getting hot. But if it grows very slowly, or at least matching the pattern, matching the trend, it actually doesn't increase in the risk score as it grows. So if you actually look at my chart, the risk today is exactly as it was, I don't know, last year, beginning of last year, or a while back. The valuation is still the same, even though we are nominally, we are much higher. So here we were at 70K. About a year and a half later, we are at 108, and it's still the same risk, right? So the same valuation. We still haven't really entered the bubble phase. So this is all methodic. There is nothing to worry about. So I'm not worried about like a crash here. But the moment we get into the like rapid growth, then I'll begin worrying about crash. So it's all about the rate of growth. If the rate is too fast, you should expect some breathe. If the rate is very slow and methodical, then it's all kind of fundamentally supported growth. So you could rest assured that it's still a great time to just hodl and not worry about anything.
And it's also possible then that we hit this magical 250,000 if we get a little bit of bubbly area.
Yeah, sure. Of course, we could get to, if you actually want to look at more detailed predictions, we could do a last look at my chart. Sorry for just doing back and forth. But on this one, I have a more clear price levels, right? So if we enter the bubble zone, like here, for example, the model would say, according to the past pattern, you probably by the end of the year, you're at a 200K range, maybe a little bit higher. And that would be the danger zone. So if you actually get to this range, I would totally expect a crash. This is too fast, right? Imagine how many billions of dollars are needed to sustain price at this point. And then this is probably something we can sustain if we have nation state adoption and so on. Otherwise, we'd have to still wait for it to come back down, and then another cycle take us to closer to 500K or $1 million. But right now, for example, by the end of the year, a price of 133K is equivalent in risk to today. So if we go super slowly towards the end of the year, which I don't think this is how it will play out, we have added no risk. But if we get to the 150 to 200 range, risk has begun. But really, it's above that point that I'll be thinking to myself that like, there's a certain probability of imminent crash. But in my book, closer to 200, maybe 180 and above is where I'm expecting this cycle to end. And there is also a chance that this is the pattern of cycles will not exactly repeat as prior cycles moving forward. But this doesn't change the fact that nothing's price can grow much faster than the actual capital flowing. And so that's kind of the never kind of a permanent feature of all markets.
I don't know, you probably got the question a lot already. I don't know if I asked it last time. What would need to happen to completely break this model to the upside? Let's say like $1 million this year. I personally don't think it will happen just because of the pure amount of money that needs to flow into this asset. But would, for example, like Apple saying, hey, we convert 10% of our balance sheet to Bitcoin. Like, do you imagine a situation where this can even happen with all the market dynamics?
The answer to the first part is simple. You just need trillions of dollars to come in. And then the question is, where is that coming from, right? Yes, if nation state adopts Bitcoin and they suddenly buy massive amounts of it, for sure, that can happen. But realistically, we are far from that at this point. Even if anybody adopts it, it will be just dabbling in. It would be small amounts, just testing what's going on. And there's also a great point that I've heard, which is it's not even going to be easy for these people to buy on the spot, because if they do, the price will run up massively. Like imagine UAE wants to buy a lot of Bitcoin. They have a big challenge because if they try to do it, the price will run up. So they have to actually find another trick. Maybe they buy up strategies, Bitcoin, or some other person that has already accumulated a lot of Bitcoin. So that's one aspect of it. And no big buyer wants the price to rise super fast. So they will start buying slowly and methodically, and they probably actually buy less when price goes up. So you need one of those huge changes. And I think we've had our big moment this cycle. We've had the moment where all the government side, the government used to be the opposing side to Bitcoin. Right now we have changed that. Like the whole administration is now meme traders and they issue meme coins, and that's the less interesting part of it. But we've gotten SEC to be very supportive. We've gotten the whole US government apparatus, and then a lot of other regulators will just follow from there in different countries. They are now turning more positive. But we still have a huge amount of inertia. Like I was at a dinner with a friend, a very successful guy, high net worth, a business owner, and a PhD in economics. He thinks most of this all is unsustainable and low value, kind of like a Warren Buffett approach, mentality. We need this to change, and you can imagine how fast will people change. It's not fast, right? It's a slow. So a little bit of it is with just age. New generation should take over, and then some of that is with more and more institutional adoption. I was at BlackRock adopting. Begin accumulating Bitcoin. It was not on my bingo card for, I don't know. If you ask me, I would say that we were still like 3-4 years away from that, but we got it last year. President of the United States talking about Bitcoin, and how great it is, and it's a good payment method and all that. That definitely happened much faster than I was expecting, right? So we've got an R big push this cycle. It's probably not realistic to expect another huge step at this point. This needs to be more, the market needs to be bigger, needs to be even more liquid, and needs to be more adopted everywhere. That's why I'm really focused on making sure Bitcoin is not just a store of value, but also a medium of exchange. Because the more it is adopted, the more you get that base of the more of that user base is formed around the world in the billions of people scale that will support the next huge level, right? The reason Trump liked Bitcoin was not that he studied a book about it or he kind of discovered the economics of it. He just saw a lot of people like it. And then that got his attention, and then all the other things happened, right? The reason we got Ross Freed was just the numbers. A lot of people wanted that to happen. So you need individual level adoption, right? The fact that a huge institution buys, that's fantastic. It grows the price, and it can also later help with adoption. Of course, price is one of the best marketing tools, but we should also make sure that Bitcoin is actually used in creating positive economic outcomes and improving transactions around the world, and touches everybody's life on a more frequent basis. This is going to be the best way to bring that nation state adoption and further adoption from all the other institutions that are apprehensive right now. I think we are away from that for a few years, but who knows? We've seen many surprises in Bitcoin.
And it's interesting because when we think about, oh, this is happening faster, we just have to think about how hard it is to get family members orange pilled and how long this process is of them actually getting it, and then just think about how hard it will be for a single Bitcoiner in an organization to orange pill all the other executives to get everyone on board. I mean, Strategy and those companies are an outlier because there was one guy that called the shot. The same with Tesla, the only company still in the S&P 500 that holds Bitcoin, I think 11K or something like that. Elon Musk decided to do that, and he did that, and he calls the shot. If he sells all of them, it's his decision. If he buys a lot more Bitcoin with his, 30 billions of cash, he can do that. But not a lot of big companies actually set up this way. If Tim Cook gets orange pilled, it will even be hard for him to convince everyone in Apple to actually do that and go ahead that. So I think that's actually a good way to think about that even if we have some euphoria, it's probably unsustained and it needs some longer time to actually sustain. And I personally am a big fan of that because I'm young and I want to accumulate Bitcoin. I rather have Bitcoin at 50K than 5 million because I want to accumulate some Satoshis before I get older. I'm just 26 years old, so I have a lot of life in front of me. And so I'm a big fan of that, and let's have the crashes coming. I think and it's a good way. It's a good thing that you said, because I personally also think that we are moving very fast. If you told me that the United States president will talk positively about Bitcoin and launches his own meme coin, if you just told me this 2 years ago, I would call you a lunatic.
Exactly.
Never will happen at all, because it was just not on the radar at all. So I feel like we're already ahead. It's one of the best. I heard that from Nika from Simple Bitcoin. I don't know how you look at that. This cycle is the best cycle for news and the worst cycle for price action. I think people are just upset that there's not those huge upswings. They need the adrenaline kick to like, oh shit, like we have 10x, or like it goes down like 80%. I'm glad it is not like that. But that's kind of, I think, how some people look at that.
Yeah, with the news, that's a good reminder that a lot of the news is biased towards the positive. A piece of paper is introduced in a corner of the world that says we may like to do something with stable coins. That suddenly turns into headlines about, oh, XYZ is planning to buy Bitcoin. So, on something is definitely wrong with social media, that it kind of distorts information like that, and it pushes people to be kind of overly sensitizing and kind of trying to overexcite people. And that's why you think there is all sorts of good things happening. Everybody's talking about the massive change that's going on, and then the price doesn't move. I see this like probably several times every day. Somebody says this guy is buying and the price doesn't move, and definitely you look at the comments and somebody's like, it doesn't make sense, make it make sense, have so much positive news, and the price has already moved up a lot. And the market needs time to absorb it. It's better to adjust your mental model to reality than to be living in the world of headlines where much more unrealistic outcomes are expected. You can go back to I can show you my older tweets earlier this year when we were at above 100K. I was hearing people say, okay, never going back below 100K. That's a tweet that always comes back. We never go back below 100. And then the other kind of tweet that really gets me worried because is the one that says, we're already at 100, 500K is coming, that my price target is 1 million this year. This were very commonly discussed. Whenever I hear this, January, February, I was hearing this and I was just selling more and more options. Previously I would get really mad because this has terrible effect on other people, right? They get overly bullish and then they get disappointed, right? So I would just try to fight it, but I don't have the power to fight that flow of information. It's kind of a systemic feature of social media. Instead, I calm myself by selling more options to at least position myself against the guy who overpromises. That's why I said expect this to happen. Once the price runs up, you would see expectation runs faster. Right, so then you have to be smart and know the game. The game for a lot of the content merchants, I don't know how to call them, but like engagement farmers, the goal for them is to promise you the moon, and you have to be just smart to filter it out. Unfortunately, that's about like 90% of what I see. That's why I have an extremely cleaned up, feed, but for whatever reason, most of what we hear is kind of emotional takes, right? So if you really want to succeed in this market, you have to stay rational as much as possible. And it's going to be very difficult. Once the price goes to 150, once it goes to 200, it would be very difficult to stay rational. And that's exactly the time you need it most.
I 100% agree. And I mean, I can talk for myself. A title and a headline that reads the actual thing that is in the actual thing completely and nuanced, nobody will click on. So it's always this game of like not being overly excited, like not painting too positive or too negative, because like both things work. But at the same time, if you write a nice article and it has just a shitty headline and nobody reads it, then also the article is also like not fulfilling really his purpose. So I get it from some people, but some are just like overdoing it, and it's like, oh yeah, like that has nothing
all
to do
caps.
With reality. Yeah,
it's happening.
And I'm not completely like I'm guilty of that too. But I hope I'm now kind of outsourced the title and the thumbnail thing, and we kind of got to a place where we want to have a more sustaining long-term view on that, and actually saw a few things happening. The average view duration spiked a lot. Like people are watching the video longer once we marketed more realistic. and people just like it more. It's just not that parabolic growth, that like it's more organic growth, which I think in general is good. Which brings me also, I actually love the point that you said with looking at the lows of Bitcoin price. I do the same thing actually with my channel. I look every week or every month at the lowest performing video. At like which video flopped the most and how many people watched it. This gives me kind of a sense of like, if I do everything wrong, like how many people still watch. And this is a great indicator, because in the starting, this was like 20 views, 30 views. Now it's still like almost like 1,000 views, even if the video does really bad, which is like nice. There's some people that really watch every episode, that just click on it because they like the product overall. And looking at the base at the lower end of the video views or the Bitcoin price, or like you can probably make that with a lot of things, gives you a lot of calmness and not chasing the highs, but looking for real adoption. And B, it's just, I think, very good for your mental health. Not chasing the highs, but like building the lows.
Exactly, because highs may not repeat all the time. You may get, a boost from a cascading flow of information. Somebody big really likes your interview and promotes it, and you get a lot of views on it. But it may not be that sustainable or that repeatable in the short time, right? But that bottom is the organic adoption, which is always repeatable. So it's, like you said, always better to move the level up, and then if something explodes beyond that, that's just extra.
I had you on, I think, about a year ago, and I think we said something. I don't know if I said it or you said it. Actually, I saw it in the intro highlight reels that I mixed together, that the next couple of months are going really good. And we're kind of saying the same thing again. And the last year I just checked, we are up almost 2x. So it's like 97% performance of the past 12 months. Which is awesome. And also to the point of people are disappointing with the price. Like it literally doubled in a year. Like that's pretty good performance for in my world, at least. Are you now even more bullish than a year ago? I mean, we kind of covered that with where we are in the model, but overall with everything going on, how do you look at kind of where we are in the bullishness for the next months?
Yeah, I mean, I was mostly less bullish because of the trade war, because I've exactly laid out wrote articles, videos, and all that on how this could damage many things, and I'm really happy that it's mostly over. Right, another little episode is beginning, but the market had a chance to process it. Right. So we did crash, we did recover, and we did the chop that was needed. So I feel a lot better now about that, and it can still cause some volatility, but it will be less and less. And then the money supply growth that I explained before, all the other macro events that are happening, they have been. This is a point when they're flipping. In the last 6-7 months, many things were going in the bad direction, because again, Trump was causing capital to leave the United States, leave financial markets. And if you notice, for a while, actually, European stocks were outperforming American stocks. All this will begin to change. The moment the turmoil slows down, a lot of that scared capital will come back in. A lot of that will find its way to Bitcoin. And then and like I said, the government has reached a point. Let me go back. If you look at our playbook, one of the very clear and high conviction points we had was that Doge, which was the deficit reduction gang, they were not going to be able to do anything. and I've called it toothless Doge, which of course since then we've seen that they did nothing. They promised trillions of reduction, which actually sounds like Elon Musk has no idea about the deficit math. If you reduce the deficit by 2 trillions, everything is going to crash, and it will be hell in financial markets. So you can't do that. And then he said a few $100 billion. That didn't happen. 50 billion, that didn't happen. I think we got like a minimal amount of reduction, a fraction of what they had promised. So deficit is not going down. And then we got all the tax bill that supercharged the deficit. It's not just reinstating or making permanent the deficit causing original tax bill that Trump had in 2017. It makes that permanent, but it also adds more deficit increasing stipulations. So, and then, like I said, we are due for a lot more cuts as well. So we are in a very restrictive monetary policy situation right now. We are also in a terrible macro position because of all the trade war and potential for economic slowdown and all that. But the good thing that makes me really excited is all this is changing, right? Monetary policy resistance is breaking. Powell is losing his grip, losing strength. As he gets close to the end of his term, the data is, being much more helpful. The Fed, just can't resist longer. We've had a full article on this. And then, of course, money supply expansion and all the other things will arrive. And remember, Trump had huge incentive to crash the markets first, but then begin to support the markets towards the later part of his term. So essentially, to me, it's like the hard part is over and the good part is beginning. And I love to not see it in the price for some time, because that's the best place you want to be in, right? You want to have a bullish outlook, which the market still has not priced in. And like you said, if the price goes to $1 million tomorrow, I'll be very happy. But then my future expectations will be at zero, because it's done at that point, right? There's no more. It's very limited chance that we go even higher. So you have to keep in mind, if you get too excited about a massive price rise, that could also mean that your accumulation window just ended. So I'm happy with what's happening. I'm happy to be in a place where the market is slower in pricing in things, and it gives me time to even accumulate more and more. But yeah, for the next 6 to 12 months, I'm very, very constructive. Of course, something can always happen, but the way things are going, it's going to be very, very, very good. So excited for what's coming, and hopefully, in 6 months, we are talking about a completely different market and a completely different price range, and then we can talk about astronomical price moon promises in the media that we'll be getting at that point.
We can make a New Year's Eve update on the price in about a half a year and see how far we drop in 2026. Because 2026, if we follow the cycle logistics, I'm actually. Do you also think that the cycle things like 3 years green, 1 year red will drop at some point, or like might even drop this time because we have institutional buyers and different buying behaviors now?
I'll give a quick answer. I do expect that to happen, but it's not happening yet. Because if you analyze Bitcoin the way I explained on the quantile model, and if you adjust for diminishing return, the same pattern is happening. So actually, we didn't have time for that, but I have a different model called cycle model available on our website, where you can see that we're actually following the prior cycles pattern. We are very close, a little bit behind where the model would recommend, but we are in the same range. So the pattern is repeating. It's just less growth and less crashes because of diminished volatility. So that's why people think this is a completely different cycle, but it's really not. Maybe next cycle we get different things, but for now the appreciation is kind of matching the timeline very well, except in the ETF time we got way ahead of ourselves, then we came back, and now we are kind of on track. If we don't really move, and that model basically would say, according to prior patterns, you are looking at a topping point of November, December. Like, if we get significantly deviated from that, then you can say that, okay, the cycle is completely different. But the way I see it, if you just don't look for exact repetition, it's kind of this, it's rhyming very well. So maybe next cycle will be completely different, but not yet in my book.
Really cool. I have one question that I ask each and every one of my returning guests. And the question is, what have you learned since your last appearance on the podcast outside of Bitcoin?
Outside of Bitcoin. This is going to be a sad point, but I've learned that a lot fewer people actually want to fight for freedom than the people who say they will. So, but yeah, next time I might think of something more positive.
I think a negative points are also fine because it's something. I got to know the Bitcoin community in a whole different light once I started talking with everyone on a podcast, because prior to that, I only had Twitter contacts. And then you see, I talked with now over 500 different Bitcoiners on my podcast. So you see a lot, positive and negative. I think the overall positive thing is like, most people are super nice and super kind and extremely generous also. But not all Bitcoiners are like that. And there are people that just are out for the money, they just have a show. And there are unfortunately some people like that. And I think, I don't know if is that what you mean, but there are a lot of people that are just driven by the money and not really by the mission of Bitcoin.
Yeah. And let me flip it. This time I want to learn from you. What is it that you have learned since last time we spoke? Of course, maybe the biggest one that comes to your mind.
I've learned this will all be media related because I'm kind of building a media company. I've learned basically how to best monetize a media channel without selling yourself out, which is really hard. And I actually have done that very recently, where I'm now building with Microseed and a new metal backup thing. Where I'm like, I think this is kind of what I've learned since the last time, completely outside of Bitcoin. In Bitcoin is also crazy, but outside of Bitcoin, you actually have to build something and provide value for other people, and then only you get to demand value for yourself. So you have to kind of deliver first, and you have to deliver real value, and then only something will come back to you. I see a lot of content creators out there and saying like, hey, I have a podcast, like I demand that and that amount and this and that amount and this. And like, it's not that easy because you have to deliver first value to other people before you can get something for yourself. And here I learned a lot, but without stretching it too much, I will leave it at that because again, could make a whole podcast out of my learnings from different partners and monetization methods. And because I'm not a big fan of like making a course or something like that. I just want to make it free and I don't want to put like an episode behind a paywall, like a podcast behind a paywall or anything like that. I know it's a alleged way of doing it. So the only ways is kind of like coming together with Bitcoin companies that I really like, and you have to kind of find them because there are a lot of companies that would like to be on the show as sponsor, but I don't want them. Like I would never promote something that I don't personally use or like that does not make sense for me. So yeah, that's a hard learning how to do that, and it's not as easy as it seems. And especially in the beginning, it's a steep learning curve. But once you got it, it's like, okay. And it feels like I'm on like 5-6% of that learning curve. Like I'll slowly learn, and there's a lot of room for me to still learn.
Yeah, I'm glad you say that because it helps you be more sustainable and keep doing the great work that you're doing. And yeah, I mean, a lot of us are doing this just as personal interest, but at some point it has to be sustainable too. So yeah, figuring that the business part out is critical. And I think, yeah, a lot of people are kind of late to this or think of it as an afterthought, but once you figure it out, you can make your work and your hobby the same. So that would be fantastic.
Exactly, that's what I'm trying. That I've been doing for like over a year now, and I've not yet touched my Bitcoin savings, and every month is a little bit better than the previous month. So I'm really glad that it turned out that way. Yeah, thank you so much, Sina. We have an end routine, as you know, where the previous guest is asking a question for the next guest without knowing who the next guest actually is, and the previous guest asked you the question. And I think there are not a lot of better guests for that question. So you're the best guest for that question. What's your Bitcoin price prediction by 2030?
2030? Because my 1 million target is 2033. So by 2030, we're probably at 500, 600K. Yeah, that's what I'm expecting. So
I'll take it.
Willing to be surprised to the upside, but I'd rather rely on what the numbers from the model tell me.
I will gladly take it. That would be kind of a 5x in the next 5 years. That seems very reasonable.
Yeah, especially if you have a big position, right? If you have a big position, you'd be very happy with 5x. But if you don't have enough conviction, you haven't done your study, you're just you're allocated 10%, then you're looking for 1,000x numbers, which is not realistic.
If you're looking for 1,000x, you probably get a 0x.
Or negative.
Or negative, yeah. Then yeah, thank you so much, Sina, for being on the show. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.